The subject is cash management and liquidity. I think an appropriate topic for the kind of crisis that we're all in right now. And what I wanted to do today was talk with you all and get your opinions and hear your experience on dealing with these issues. Well, to begin, I'd like to hear from each of you just briefly your perspective on how important liquidity issues have become for your company, from your perspective, or for your clients in both of your cases. We read in the news that companies have struggled to make sure that they have adequate cash, adequate liquidity. I've heard anecdotally that CFOs are spending a lot more time thinking about these issues, having their board members call them up and asking, what is our cash position today, how are we doing? I'd be curious, maybe David, we can start with you. How has it risen on your priority list?
Yes, in fact, due to the economic downturn, the banks are very conservative,
yeah.
because they also get burned in the supply issues, so they are very cautious in lending. So, for us, because due to the economic downturn, the business not so good, so now we are more concerned about the liquidity of the company.
Mm-hmm.
So we spend more time on this issue now.
Right. And Cassandra, how about for your clients? David mentioned about the difficulty of getting credit from banks and so forth, more caution. What are your clients telling you in terms of their liquidity concerns?
Definitely, they, in terms of wanting to ensure the business continues to operate without any risk of default. We're seeing clients looking to see how they can optimize the cash that they do have, and how to do that, not only optimizing the yield but also controlling what goes out and what comes in. Ideally, whatever needs to go out, goes out as late as possible, and what comes in as early as possible. And then when it's in the accounts, making sure that the yield on it is optimized to its most efficient point.
Yes, right. And Estelle, for Country Garden?
Yes, thank you.
Yeah.
Because as the CFO of a company, especially for property industry, it is a capital-intensive industry. So that's why when the market is in the bull market, so everybody will talk about the yield enhancement and also the margin, the profit margin, etc., etc. When the market is not, liquidity as well as solvency will be the top priority for the company. You have to get yourself survived before you talk about any profit margin or anything.
Right. So in the past, it's let's talk about profits. Now let's talk about survival.
Yeah.
Yeah. Right.
Survival is important any time, but now it's equally important.
In just a moment. And Simon, how about for you? The clients that you work with?
Well, I hope you're going to ask about Asia now, because our cash flow has never been better, actually.
Yes.
Perhaps because we work in the area of liquidity and risk management. But if I were to speak,
well played.
If I were to speak on behalf of my clients, one of the interesting things about cash flow, and particularly working capital, is that it is typically a leading indicator of economic trouble. And from really the middle of last year, I was starting to hear more and more from clients that cash was an issue for them. And in fact, I remember being at the Economist EIU meeting in the middle of last year, the CEOs group, and almost half of them mentioned receivables and inventory pressure as being an issue. And I think that stems from clearly trading issues, customers who have liquidity problems. There are issues in terms of getting funding, so in some cases credit lines that companies have been able to rely on are no longer there. And thirdly, because asset valuations have gone down, their ability to actually leverage assets and borrow money has also gone down. So there are big issues. How do you deal with that short term? Often through better operational management of working capital, because if you don't have recourse to funding, you have to work with what you've got. Yeah.
Yes.
So we would argue for a very disciplined approach to working capital. Of course, the ideal thing is to do that before cash becomes an issue.
Yeah.
But certainly now, companies in most sectors still have significant opportunities.
Yes.
As you know, because you used to run a survey on working capital.
That's right.
CFO, right?
That's right. Kelly, how about you? Maybe to turn to you. Working capital management. You guys obviously have a lot of customers in the region. How do you see opportunities to improve the way that you manage working capital at this time?
I think since we are, basically the consumer product area, and we're also very connected or related to catering business as well as retail business, so which are also very fragile in terms of these under this economic situation. So definitely we fully understand the difficult time that our customers are facing as well. But in the meantime, we also need to ensure that the collection side is performing properly in terms of accounts receivables. So we have to strike a balance in terms of the relationship between, in terms of our relationship with the customer, as well as making sure that we are able to collect the outstanding balances from those our customers. Especially in the catering business, we are very sensitive to this industry. As far as I observed so far in the past 6 months, they've been doing a lot of carrying a lot of policies or taking some programs that they, in terms of getting some improving their own cash flows. Especially they have to pay rent, as well as fixed costs in terms of their labor costs. So, for example, they introduced some kind of loyalty programs immediately, right after the tsunami started, and we can already observe that they are, to some extent, in the cash flow problem.
Yes.
So. During this time, so we are trying to observe as closely as monitor as possible to ensure that the collection side is doing properly, monitoring properly, as well as in the meantime we don't want to also damage too much the relationship between us and our consumers, because based on our past experience during SARS in 2003, we come across similar situation, and there was quite a lot of outlets, or restaurants that collapsed or closed down during those times,
Right.
but there is still quite some of them, they can still survive,
Yes.
and at the end we still maintain good relationship, and we want to, during this year and during this difficult time, we also want to ensure that we are making the right decision in terms of dealing with them, in maintaining the good relationship, in the meantime, making sure that we collect the balance
Right.
from them properly.
Right. Well, you raise an interesting point, which is this question of, at a time like this, everybody wants to collect faster.
Yeah.
And yet that can put some of your own customers in jeopardy, particularly if they're struggling themselves.
Sure.
And how to strike that
It's
balance.
very difficult decision sometimes,
Yeah, I would think so.
Yeah.
And Simon, actually, do you have any thoughts
Well,
on
if
how
I
do
could
you strike that balance?
offer a perspective on that. I mean, first of all, it's about intimacy, and if you go into a crisis without having a sufficient level of customer intimacy, you have a significantly higher level of risk, because you're not able to anticipate either cash flow or complete default, as well as if you have intimacy. And there are some simple process and sales related things you can do to increase intimacy. I think a helpful way to look at receivables is this: until they actually cease trading, every company is paying somebody, and the entire focus of a receivables improvement program should be to ensure that you are the company that gets paid, right after the IRS, of course, who generally have first dibs, but you're the company that gets paid.
Yeah.
David,